This is a learning and exam preparation video for the IB Business syllabus. At the end of the video are practice assignments for you to prepare you from the exams. Please click www.intmace.com on the link at the bottom of this video to do the assignments for this topic. Unit 3.4 Final Accounts 3. The balance sheet. It is also known as the statement of financial position. It is a snapshot of a firm's financial position and is used to calculate a firm's net worth. It gives the firm an idea of what it owns and what it owes, including the number of shareholders' investments. This outlines the assets, liabilities, and equity of a firm at a specific point in time. Asset. These are resources of value a business owns or are owed. They include fixed assets and current assets. Fixed assets are long-term assets that last in a business for more than 12 months. Tangible assets include buildings, equipment, and machinery. Intangible assets that are non-physical in nature tend to be difficult to value. Current assets are short-term assets that last in a business for up to 12 months. These include cash, debtors, and stock. Liabilities. These are a firm's legal debts or what it owes to other firms, institutions, or individuals. It arises during the course of business operation and is usually a source of funding for a firm. Long-term liabilities are long-term debts or borrowings payable after 12 months by the business. They include long-term bank loans and mortgages. Current liabilities are short-term debts that are not payable within 12 months by the business. These include creditors, unpaid suppliers who sold goods on credit to the firm, a bank overdraft, and tax, money owed to the government such as corporation tax. When we know the liabilities of a business, we can calculate its working capital. Working capital. It is an important element in a business because it indicates whether the business can pay off its day-to-day bills or running costs. It is calculated as working capital equals total current assets minus total current liabilities. Equity. It is also known as shareholders' equity or shareholders' funds. It includes two aspects, shared capital and retained profit. Share capital refers to the original capital invested into the business through shares bought by shareholders. It is a permanent source of capital and does not include the daily buying and selling of shares in a stock exchange market or the current market value of shares. Retained profit is the profit plowed back into the business obtained from the profit and loss account. This is the money owed to the owners but which has been reinvested so as to purchase necessary assets in the business. Intangible assets. These are fixed assets that lack physical substance or are non-physical in nature. However, even though they do not have physical value, they can prove to be very valuable to a firm's long-term success or failure. Some examples of intangible assets are patents, goodwill, copyright laws, and trademarks. Patents. These provide the inventors with the exclusive rights to manufacture, use, sell, or control their invention of a product. The inventors are provided with legal protection that prevents others from copying their idea. The legal life of most patents is about 20 years, however, depends on the useful life of the patents. Goodwill refers to the value of positive or favorable attributes that relate to the business. It includes a customer base and relations, strong brand names, highly skilled employees, desirable location, and the good reputation a firm enjoys with its clients. It usually arises when one firm is purchased by another and is valued as the amount paid by purchasing firm over and above the book value of the firm being bought. Copyright laws are laws that provide the creator with the exclusive right to protect the production and sale of their artistic or literary work. Creators include musicians, authors, and film producers. It will only apply if the original ideas are put to use, such as in the creation of a published novel, a music album, or developed computer software. Most copyright lasts for between 50 to 100 years after the death of the creator. Trademarks. These are a recognized symbol, word, phrase, or design that is officially registered and that identifies a product or a business. Trademarks also distinguish one firm's products from another. Anyone who infringes the trademarks of others can be sued by the trademark owners. It can be sold for free, and most last for a 15-year renewable period, depending on their use. Practice assignments, exam prep assignments for the IBA Business Studies syllabus. You may now proceed to try out the exam preparation assignments. All assignments will be marked and feedback will be given. Should you need to speak to one of our tutors, send your email to administration@intmace.com. Please proceed to the link www.intmace.com at the bottom of this video to commence with your practice. Please click subscribe to our video if you find the content useful. All the best with your assignments.